This new attack from the SEC will change everything and is signaling to the crypto markets that Gary Gensler, chairman of the SEC, is on a crusade to burn it all down like Nero playing his fiddle while Rome burned. But what exactly does this mean for crypto investors and XRP? In this video, we'll cover the new lawsuit at hand and how this will likely play a role in the XRP lawsuit, which is awaiting an appeal by October 6th. I'll also share a shocking conversation I just had with ChatGPT that predicts with a high likelihood what the odds are that XRP will see more of a pushback from the SEC and when it will likely occur based on their track record. So by the end of this video, you'll be more informed on the developing situation and you can protect yourself and your XRP bags, especially if you're waiting to invest or plan to soon. We'll also be covering a few other market dynamics like the job sentiment, which is a major factor in crypto markets and altcoins as they're predominantly pumped by retail. We'll be covering the current macro environment and what the Dow Jones and its relative strength can tell us about what's going to happen next in crypto markets. How the timing on many SEC cases seem to be strategically played to almost rig the odds in their favor. And of course, how to manage your crypto portfolio through any potential turbulence in the coming month. So if you're feeling blessed and bullish, comment 777. And if you're going to be the richest person in your family tree, smash the subscribe button. Let's get into the video. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Now, if you've been in the crypto space for a little while and have messed around with NFTs, OpenSea is one of the largest, if not the largest, NFT marketplace in the world. Its only closest competitor would likely be Magic Eden. That said, OpenSea seems to be the place to buy NFTs. OpenSea offers a marketplace allowing for non-fungible tokens or NFTs to be sold directly at a fixed price or through an auction. The majority of these things, whether they are for memberships or whether they're just fun in terms of art, are designed to be art for people, okay? Artists are able to take a product and then share it with the world and earn a commission. Generally speaking, that's how things have been. Now, a lot of people probably got into NFTs at some point or another in order to make a profit. But as long as the actual person selling the NFTs didn't promise a profit, it'd be hard to consider that a security. Now, I would argue that OpenSea and things like Magic Eden would be very similar to, let's say, a Facebook or an Instagram or a social media platform, and they should have the same protections, right? Just because I'm allowing people to post something on my platform doesn't make me the actual editor of it. In other words, the person posting the stuff on the platform itself, as long as we have, some sort of structure and guidance around the platform, maybe some rules or regulations, ultimately they are in charge of what they say and do, while I am simply providing a platform for them. And that's kind of how OpenSea has operated. Now, a guy by the name of Devin Finzer is the actual founder and CEO of OpenSea. And just a day ago, he basically said they received a Wells notice from the SEC threatening to sue them because they believe NFTs on their platform are securities. We're shocked the SEC would make such a sweeping move against creators and artists. But if this is a move into uncharted territory, by targeting NFTs, the SEC would stifle innovation on an even broader scale. Hundreds of thousands of online artists and creatives are at risk, and many do not have the resources to defend themselves. That said, he's basically committing $5 million to any cases that might be brought up in terms of NFT creators and devs that might also receive a Wells notice. So this is a big play. However, it seems that the timing is really interesting as NFTs are near a pico bottom in terms of popularity. So the majority of these companies in terms of OpenSea and Magic Eden are seeing less and less revenues, and it's just interesting that now is the time that the SEC and Gary Gensler decide to attack. And in this post from Adam Cochran, he basically shares that. And the SEC is targeting them once they've declined in popularity, investment, and revenue, hoping to pick them off like an injured animal at the back of the herd. If the SEC had concerns about NFTs being securities on OpenSea, the time to address it is to protect people would have been when celebrities were posting the Bored Ape profile pictures on talk shows, not now. And that would be more than true, right? If they really aim to protect investors, why wouldn't they do it at their peak of popularity? Well, I'll tell you probably why. And this is no guarantee. I don't know if this is 100% true. It's all conjecture. But at the end of the day, it seems that the SEC waits until a company is weak or the market is weak, and then they attack. And we actually did see that in the lawsuits against Kraken and Coinbase. Back in February 9th of 2023, right when the market was just starting to recover, when the SEC probably saw an opportunity to attack, they didn't know, nobody really knew the market would recover as quickly or as strongly as it did. All they knew was, maybe the bottom was in, markets seem like they're looking a little stronger. Well, we've got to attack now, because they might have just been waiting for an opportunity for these companies to have less revenues to attack. And that's when they did. Kraken was to shut down their US crypto staking service and pay a $30 million fine in an SEC settlement. You know what's crazy though? The SEC wasn't happy with that alone. So then in November 20th of 2023, or around that date, they actually went and accused Kraken of operating an unregistered securities platform and improperly mixing customer funds, which was completely out of the blue. So they decided to settle the first time around. The second time around, they say, you guys are doing something bad. Again, we're going to attack again. I mean, it's absolutely ridiculous. And from that point in time, Kraken is now in a situation where they have to proceed to trial. But what's so ridiculously silly is that today the federal court from the Northern District of California ruled as a matter of law that none of the tokens trading on Kraken are securities. So think about that. They are charged yet again and attacked yet again as a crypto company, yet none of the tokens themselves are securities. But just because ORIC, which is the judge, ruled that the cryptocurrencies themselves were not securities, it does not mean that the purchase and sale of them cannot plausibly be considered an investment contract. I mean, this all just sounds like hearsay at this point. It all just sounds like we're trying to find a case in something, and so we're going to continue to pick at the weeds until we find an imperfection, and then we'll work with that. And since the judge is trying to probably be impartial, they have to look at all of the facts. That said, the SEC is bringing up these lawsuits in ridiculous manners, under ridiculous circumstances, wasting taxpayer dollars, and I think everyone in crypto knows that by now. Then in March 22nd of 2023, the SEC threatened to sue Coinbase over some crypto products. Coinbase being a company that's already registered with the SEC and is a publicly traded company and probably had all of these checklists to make sure that they were legitimate and ready to operate in the United States, wanted to start offering some products and expanding. And then at the height of their weakness in the bottom of the bear market, just as the market was starting to recover, yet again, the SEC strikes. Why wouldn't they do anything beforehand? Why didn't they wait to do things when maybe they went public, or didn't allow them to go public, I should say? I mean, it just sounds like there is a scorched earth approach, and everyone believes that to be true. But consistently, they are attacking companies left and right in the crypto space, and now they're going after OpenSea. So what would this mean for XRP in the settlement that they recently reached? Will the SEC SEC make an appeal? Well, I actually asked ChatGPT, based on all of the facts it could possibly gather and based on the SEC's track record, to answer these questions that I had, okay, in one word or less, unless I needed more. And here's what ChatGPT said, which is shocking. So I asked, and I made the statement first, I should say, I want you only to answer questions with one word unless I state otherwise. It responded, understood. Now, has the SEC been friendly towards crypto? No. How many crypto companies have they sued now? Over 100. You may use more than one word for this answer, which are some of the majors, obviously XRP, Ripple, Coinbase, Kraken, Binance, US. Does the SEC under Gary Gensler, or do you think the SEC under Gary Gensler will stop suing crypto companies before his tenure is up? Unlikely. And isn't that interesting? We just had another lawsuit. You may answer this with as many words as you want. Why do you think this is? Gary Gensler has consistently emphasized the need for strict regulation in the crypto space, viewing many crypto assets as securities, which is silly because he's losing across all fronts, that should be regulated under existing securities laws. His tenure has been marked by a focus on enforcing compliance. Given his regulatory philosophy and ongoing enforcement actions, it seems unlikely that he would ease up on suing crypto companies before his tenure ends. His actions are likely driven by a belief that strong oversight is necessary to protect investors and maintain market integrity. And I would argue it is the market's belief that there is some sort of a conflict of interest, that he has an interest in trying to burn down virtually every major crypto company, period, after they've already gotten some level of the go-ahead from the SEC to operate something like Coinbase or Kraken, yet they consistently attack after the fact, right? To which I ask, and here is the interesting thing, based on all current and accessible information you have related to the subject, what are the odds from a percentage-based perspective that Gensler and the SEC appeal the XRP Ripple case by October 6th? Based on the current situation, the odds that Gary Gensler and the SEC might appeal the Ripple case are, by October 6th, are estimated to be 60 to 70%. This estimate takes into account Gensler's aggressive regulatory stance and the high-profile nature of the case. However, the exact decision will depend on various legal and strategic considerations. To which I wondered, what are the strategic considerations? And he usually waits until some sort of a major event, until some sort of market weakness, until basically a company, their back is against the wall, and then they attack. And so I recently took to X to figure out, okay, well, does anyone have any theories on whether or not the appeal is going to happen? Because we're at about a 60-70% chance now that they are going to appeal, which will not be great for the price action of XRP and Ripple, but I do believe it will cause it to dump a little, which could actually create for a good buying opportunity, as the majority of holders not only believe in the long-term future of Ripple and XRP, especially under a new administration, but also the strongers are very hold. Very few people are strong, I should say. Very few people, right, are selling just because of these situations now. They're already stacking, they're loading up, they're ready to go, they're ready for this thing to blast off to new all-time highs, and they really couldn't care less if the thing dumped to 30 cents. So over and over, the SEC has basically stated that they're not terribly happy with the outcome in the Ripple case. And so based on this scorched earth approach, based on the fact that Gary Gensler is still suing and arguably serving Wells notices to NFT companies, I mean, he's on an all-out blitz. And I think he's going to continue to do that into November, especially if there's a Trump presidency, which could make it political. Who knows? But it's simple. And this is a post from Mr. Huber. It's simple. The SEC waits until the first rate cut to file the appeal, just like they waited until Christmas bull run to file the lawsuit. U.S. investor protection, right? Ultimately, we all believe it's no longer really about our protection or for our bags. It's ultimately the fact that Gary Gensler wants to destroy crypto. And so based on that first rate cut, there might be some major market volatility, which could negatively affect markets and crypto. And so based on that alone, they would say, well, you know, we have till October 6th. The first rate cut might come in, you know, the end of September or into the last third of September. And for that reason, we'll appeal then when the time is terrible for markets. So based on their history, it seems more likely that they're going to wait until the end of September, about September 17th to 18th, so mid to late September, I should say, to do that appeal. And so if we get an appeal, if we get this first rate cut coming in, if markets continue continues to look just a bit weird, like we've seen recently with the Dow Jones consistently climbing to new highs and actually outperforming indexes like the Nasdaq and the S&P 500, which have consistently outperformed the Dow Jones, then something might be a little off and markets might dump just a little, which could actually create for a really good opportunity to stack to your bags at better prices. Okay, but when I see relative strength on a lagging index like the Dow Jones, and it's coming in late into a market cycle, then that's typically a sign and an indicator that the major bull move is over. Okay, in other words, when leaders that were leading the entire market for a long period of time are now starting to lag and sell off, while the laggards like the Dow Jones are starting to pump and rally, that's a good indicator. And I've read that over and over in books on markets from professional investors and traders, as well as I've witnessed it in my own time as an investor and a trader over the last 8+ years in markets now since 2016. So that said, okay, when I track the Dow Jones versus something like the Nasdaq, and we'll go ahead and put it on a percentage based scale, you can see that the Nasdaq for quite a period of time all through this last bull market has consistently outperformed the Dow Jones, right? And then it peaked sometime over here in July of 2024. So I'll go ahead and pull that up over here, pull that to the left. And as you can see, since the point in time it peaked, okay, now the NASDAQ is dumping, okay, and starting to lag the market at 6.3%, whereas the Dow Jones is pumping and is currently up 5.28% for about an 11 to 12% difference. Still, this proves our theory that it's most important to invest into cryptos or asset classes that are outperforming the others. Why would I want to bet on a slow horse when I want to bet on the dark horse that is most likely to win the race? My odds are in that, my odds are greater betting on the future winner or the better performer. That said, one of the best performing cryptos in all of crypto, I would argue, and then in terms of XRP and the XRP ledger is Cryptoland, and the ticker is crypto. If you go over to xrpl.to and look up crypto, and that would be Cryptoland, since March of 2024, markets have actually been dumping, and we've proven that and shown that on the charts over and over and over, especially when you look at Bitcoin, Ethereum, anything, right? Even XRP hasn't really been performing as well. Then you look at March 2024 on something like crypto, which was trading at under $1 at about 66 to 67 cents. It is currently sitting at $88, okay? $88 right here. And as you can see here, it pumped to a high of about $108. It is trending up. It is showing really strong relative strength to the market. So this is a very positive indicator that whenever I see a dark horse in the race, I might want to get access to that token. Now, what's so cool is you can actually get access to this token and earn it by putting your XRP to work. And the best way you can do that is by heading over to bullrunners.com. And when you subscribe, you can discover how to earn crypto, which is that token basically, in less than 10 minutes with the #1 play to earn XRP game. It is so freaking simple, and we wouldn't be sharing this with you if we didn't believe it was going to benefit you long term. Okay, first you get your XRP wallet, then you get your game pieces, okay? And then the third thing is you play the game to earn that crypto. And yes, the crypto is convertible for XRP. So it's a great way to not only reduce your volatility in the case that we see some market turbulence, okay, to the downside, because you're earning crypto, which kind of makes up for any of that. So it's kind of like dollar cost averaging down. And on the flip side, if the market gets really bullish by the end of the year, okay, then you're going to be stacking on or compounding on that XRP bag, which is, again, just a great benefit. So you have nothing to lose, everything to gain by going down to the description below, checking out bullrunners.com, and you can learn how to do that in a very simple 8-minute video is all you have to watch to just learn what it's about, how it works, and whether or not you'd be interested. So go to bullrunners.com. I'll see you on the other side. Now, we're going to dive into layoffs and how people feel about their jobs. Now, this is important because when you look at the data, it shows and proves that the majority of altcoins, so anything that is not like in your top 10, and just in general, the general health of the crypto market is completely reliant and dependent on retail. In other words, a lot of these major venture capitalists wouldn't be pouring money into these crypto companies to get their token if they didn't believe that retail retail investors are going to be there to buy the other side of that trade and those tokens. So if retailers are struggling, which, they have to work jobs in order to earn their income, then it's likely they're not going to be dumping money into crypto. It's far more likely, right, that they're going to be focused on the majors, which is their bills, their rent, their health insurance, even their Roth IRA or 401ks versus crypto. Crypto is far more risky. They've seen a lot of people lose money. And so they're not going to be playing in this game. That said, when we look at the actual layoffs since 2023 to 2024, from 2022, we are actually consistently down and we're seeing less and less layoffs, right? So we're trending down. However, that is not the case in terms of what people believe. Now, a good indicator of what people believe is going to happen in the market is based on when they go to work at a job where they're getting paid a good salary or an income, and they start to see the cracks in these companies. They start to feel the pressure from their employer. Their employers are going to the entire team saying, we really need to increase the production. We really need to work on these things instead of just doing business as normal because, the manager or their employer is feeling pressure from their higher ups and their board saying, we need to work on this thing because we see things coming that our current employees don't. And so when people start to feel those pressures, they actually start to share it. And it's showing up in data across the board. For example, larger layoffs ahead. Concerns about job cuts are on the rise for U.S. workers, reaching levels not seen since July of 2020 when people didn't know what was actually going to happen with the pandemic, whether or not we were going to recover, right? As per Glassdoor, despite a diminishing fear of an upcoming recession, employee confidence has hit a new low. And you can see here, confidence is, decreasing across the board, or I would argue their confidence in terms of keeping their jobs. And the same is true here. There's an old phrase that goes, it's a recession when your neighbor loses his job, but it's a depression when you lose yours. The percentage of Americans who believe they will lose their job in the next 4 months jumped to 4.4%. The labor market continues to sharply weaken, I should say. And this data is from the Federal Reserve Bank of New York. So we are getting data points from multiple situations or places, which proves that this is a true problem right now. Now, you could argue, well, it might not be. We might see a soft landing. Things might actually turn out well, and I wouldn't disagree. Nobody really knows. But here's what we do know. When people are worried about losing their job, they're going to tighten up on their finances anyways, and they're not going to go dump into riskier things. They're going to focus more on the essentials. And so this fear could actually play a role into the amount of money, that people or retailers are driving into crypto. So even if we experience a soft landing and things look good from a crypto standpoint, from the chart standpoint, they might, the majority of altcoins might just not see as much money flowing in, which could have this negative spiral effect. As less money flows in, the price doesn't go up, people don't feel as bullish, they're not as excited, so they don't invest, and it might just take longer than we actually think. So with the uncertainty surrounding the SEC appeal, with the uncertainty surrounding the first rate cut and how markets are going to react, with the uncertainty of the recent dump in markets, which XRP ate up pretty quickly, or I would argue didn't dump nearly as hard, what should you be doing to prepare in the case of both scenarios and environments? So what I personally am doing, and I'm not saying you should, I'm just telling you what I'll be doing, okay, is dollar cost averaging into these markets, because these are the types of prices that you do want to be buying if we see a major blow off top through the end of the year, like we have in past cycles. And if you watch my most recent video from where we talk about, the headline is Robert Kiyosaki, just look for that one. It's the very recent video. We talk about all of the bullish factors in the markets. One of those being the amount of Bitcoin available on exchanges continues to diminish through these ranges, which is a strong indicator that institutional players consistently buy up every single dip, short on the futures market, so markets continue to dump or tank while they continue to accumulate the actual spot underlying asset, withdrawing it from exchanges to private wallets because they believe in the long-term future of crypto and Bitcoin. Then you could argue that the same would be true for XRP, being in the top 10 by market cap. It is by far one of the biggest players in the space with the strongest community and holders. So that said, okay, if Bitcoin performs well, it's highly likely XRP is going to too, especially when you even look look at the last hourly chart on this dump right here, and we'll go ahead and do that. And we'll pull up a chart of Bitcoin, and you can see that Bitcoin, well, if I put it on a percentage scale, okay, actually performed around the same and actually just slightly less in this time frame. So Bitcoin is down 6% while XRP is down 5%, which is a strong indicator that now XRP is seeing far more dip buyers and far more performance or strong holders in these ranges than even Bitcoin. So yes, they do trade in tandem. Okay, there is a positive correlation. If one goes down, the others goes down. If one goes up, the other goes up, so on and so forth. But as things stand right now, if we see general strength in the market from here on forward, then you would have been pissed off you didn't buy more. On the flip side, even if it dumps a little bit more with the current dip buying and strength that we're seeing to the downside on XRP relative to even Bitcoin, it's a good indicator that this thing, when it does blow above that range here, where we have a diagonal trend line, I'll just show you right now, that whenever it actually breaks out above this range here, I mean, sky is the limit. It's highly likely we're going to go at least to $2, if not the previous all-time high at $3, and then we'll watch the price action closely. So any dips between, that 38-cent to 40-cent range all the way down to 30 cents, I think would be lifetime buy opportunities. And so again, I'm going to be accumulating through these ranges, whether we see some volatility to the downside, and accumulating in these ranges. If we break out into new highs at the end of the year, you're going to be happy. I don't think there's any way to really lose with a good, strong strategy like this. So if you enjoyed the video and you want to learn how to put your XRP to work in these ranges and earn crypto, which we just talked about not too long ago, then go to the description below, go to bullrunners.com, subscribe to the video, and I thank you so much for watching the video, hanging out with me, my friend. I look forward to seeing you in the next video. Goodbye.